Yo, so we are back with another one, and we're going to be going over what trade I took and essentially how this was a mini bloodbath for me, and explaining to you guys how to actually avoid this for yourself because this doesn't happen too often. Like you can just go back to like all of my past trades, and they're like I guess hundreds at this point. So listen up. So coming into the day, I find that gold is bullish. Actually, no, sorry. I find that gold is bearish. Yeah. So I observe the chart here and I say, okay, daily time frame is currently doing what? Breaking structure, right? So with that being said, I'm thinking, okay, the day should go a little bit lower at least, but it's already broke structure. We've retested the order block. Ideally, we want to see these lows get taken and these lows get taken. This daily low right here, okay? So the 4 hour pretty much validates our bias because, well, actually it was a slightly complex, yeah. So this is where things start. So the 4 hour time frame is currently coming into market open, not so bearish because you see this giant sweep off the sweep of the reaction of the demand right here, and it just reacts here and goes crazy high and doesn't even manage to break 4 hour structure again. Even though structure is currently bearish, we have no sign of like strength when it comes to just bearish structure. So we need to use lower time frames like the hourly to validate said strength so that we can go lower. So hourly is actually quite bearish. We get a nice break of structure to the downside. And really, it's the 8 a.m. candle that just starts to trip. So with that being said, I'm looking at this saying, okay, the hourly is good. So even though the 4 hour doesn't look too good, there's a likely chance of expansion, right? So with that being said, we scale down even further more. 15 minute. So I look at the 15 minute and I see, well, a few things, right? So coming into market open, 15 minute was actually bullish, right? So with a bullish 15 minute, we have to wait for either the 15 minute to completely shift, but we don't do that because, as you know, waiting for the whole shift to happen on the 15 minute means extremely long times, at least 45 minutes bare minimum, because you have the first 15 minute high, second 15 minute low, and then the high that has to get breached again, or vice versa. So that takes about 45 minutes. So we can't afford to do that. We need to foresee the high happening. So we wait for a 5 minute break of structure and some confirmation on the 5 minute so that we can anticipate that 15 minute structure shift. So I sit on my hands and don't do that because I thought that I just rolled out of bed at the time. I thought that the 15 minute was bearish actually. So I pretty much put myself in a situation where now I'm trading a 5 minute bullish short term chart, trying to short, even though structure is actually bearish, even though structure is actually bullish. So where does structure actually flip? Structure flips all the way here. So why am I getting caught up doing a bunch of garbage? Well, right here, I thought that this thing would break, or at least I saw it come into break. So I was like, bet this thing will break. And I anticipated for shorts. So this is purely a misread from my part because had I been patient and had I been more noticing, I would have pretty much avoided this loss right here that we first took. So right after that, I noticed that it was a liquidity sweep, right? Because I said, okay, we had a nice buildup of longs here. We know that this high needs to get taken because we have initial shorts that are stacked up above it, followed by the market open of 9:30. So I'm looking at that, seeing the buildup, seeing the entry into demand, well, like lower time frame demand, obviously. And at that point, I'm thinking to myself, awesome, lower time frame demand entry. I just got liquidated. My short just got liquidated, which I just showed you guys earlier. So we are pretty much good to go on longs, right? And the only thing was, essentially, I wanted to enter here and keep my stops under and ride this to this high, right? At least for a 1 to 2. But what happened was I'll go back and show you guys. Yeah. So what happened is I pretty much entered at the high of this candle because I thought I was getting filled around here, but I got filled very, very bad. And that resulted in pretty much me having to keep my stops just right down here because I didn't want to triple up on risk considering the first loss that I took. So after the second loss, even though I knew the overall direction of the market and that we were headed to break structure, I still said enough is enough for the day because you need to manage your risk and to make money in this market. You absolutely need to manage your risk. You cannot trade more than you anticipate, and my rules are quite simple. I can only lose twice in a day, meaning 2R. And if I do win a trade, 9 out of 10 situation, 95% of the time, I'm